All right, Jamie Strauss, welcome to the Resource Insider podcast. How are you today?
Good. Nice to see you, Jamie.
First, I'd like to compliment you on a fantastic name you have. I think you're my first Jamie on this podcast, so it's good. Good to have another one.
I'm delighted to be the twin.
So, we're going to talk about something today we probably have not spent enough time talking about here, and that's ESG in the mining industry. The role it plays for mining companies and exploration companies, but also how important it is for investors and what they're considering and contemplating when investing in a mining company. And I think, one of the reasons I'm excited to have this conversation is so many of our listeners, they're not just the big hedge funds or institutions that are kind of really on top of this stuff, but they're retail investors at home that maybe haven't started to grapple with the role ESG plays in the success of a mining company and, access to capital, access to projects, working with communities. So I'm looking forward to getting into it, but I think, the best place to start is give us the sort of 30,000 foot view of what Digbee ESG is, what you guys do, and then we'll start digging into it from there.
Okay, so that's really good. And I'm just going to touch on one of your points there. And, a lot of your listeners will no doubt be millennials, or if they're not, they should be. And, millennials don't invest in the junior mining space because of the word mining. And really, I think, if we're to really drive this industry, then hopefully we can get more millennials investing in this industry and having more conviction and confidence.
Mm-hmm.
But just to kind of step back a bit, so Digbee ESG came out of a encouragement that I had from BlackRock and Orion in March of 2020, when they basically came to me and said, you've got to use your platform to come up with a solution for the junior mining industry. Now, we've actually, on the back of research and a number of other engagements across the industry, we've moved this to the whole industry. So it's not just unique to the juniors, but it is right-sized. And that was really important. So if you look at what the problem and what the angle of ESG was every single company on this planet is going to need to do ESG disclosure of some sort or another. Doesn't matter if it's private or public or state-owned. But I think what's really key is that ESG is actually relatively common sense. It's not particularly rocket science. The industry is ahead of the curve in terms of in terms of doing ESG. Social license is ESG. It's a matter of where are we in disclosing it, which is the problem for this. So what we do is we effectively make it easy for the companies to disclose on a right-sized and future-looking basis, and ensure that the leading stakeholders are on board with this set of frameworks so that they can use it to analyze and to screen companies for their own purposes. And over 50% of the world's funds under management now are committed to net zero. So that's only a matter of time before that includes all ESG and ultimately continues to grow. So this isn't going to go away. It's a way of showcasing for junior mining companies how they are best delivering on their ESG requirements.
Okay, so there's a couple things I want to dig into there. But first, I think we should define ESG, which is environmental, social, and governance, right? And that is it's both the work that is done to protect and respect those things, but also, the work that you're primarily talking about now, I think, which is reporting them and explaining them to the market and shareholders and stakeholders as well. Is that a good definition, would you say?
Yeah, I think that's a really good definition. I think in 2021, there's a lot of focus on the emissions part of the
yes.
E. But as I think a number of commentators in this industry have highlighted, and Mark Bristow, Evie Hambro at BlackRock, particularly in a PDAC interview earlier this year, particularly highlighted, look, it's way bigger than that.
Yeah.
This industry touches so many communities and nature, and so it's got to incorporate it all.
I mean, tell me what you think of this, but I would suspect in the global scale of things, mining is a relatively low emitter, right? I mean, the environmental challenges, as I would think of them as in mining, having a bit of background on this, comes more from, I guess, sort of habitat destruction, or obviously water is the big one for mining, right? Protecting waterways and containing water and acid rock drainage and all that. I would assume, compared to, just people driving around day to day, compared to the cement industry, operating a mine with sort of a few diesel trucks and blasting is a relatively small scale emitter in the grand scheme of things.
Obviously, at the exploration and development stage, completely right. When you do get into the producer stage, you've got to go further than just the mine site. You've got to go refining, and you've got to go what effectively they call these days, not all your listeners will be aware of it, but it's coming to people's minds, is scope 3. So it's the whole way down that supply chain.
Scope 3?
There we're actually scope 3.
So this is the whole emissions. Kind of life cycle of,
exactly.
This is the rock, and this is the smelting, and this is the, copper cathode, and this is it shipped to the home hardware or wherever you're going. Yeah, okay.
And then the mining industry really falls down on that, which has been one of the big challenges. So
now is mining is mining falling down on tracking that, or on actually minimizing the emission output from that?
From the producer's point of view at scope 3, it's a bit of both. So tracking, look, ESG globally, not specific to mining, has got a bit of a credibility issue in terms of, there's been a whistleblower coming out of BlackRock recently in the press, and the ability to track ESG or real ESG is being lost at the moment. And it's a matter of how do we turn that around so that we're actually seeing the action on the ground. But you're also right. It's not just tracking it, but it's also actually the emissions themselves are quite hard. But as I think it was Mark Bristow says, ESG emissions is binary. You're either increasing it or you're reducing it. Nature is largely binary, but social is definitely not binary. It's difficult. You've got to make sure that real impact is having an effect on the ground. And it's difficult to judge, and it's difficult to track that.
And that's certainly, in my experience, something most mining companies, even a lot of exploration companies, have been acutely aware of the social impacts for a long time now, right? The quote unquote social license to operate, whether a community will accept your work there. That can have quite a binary result, right? We see this. I've worked extensively in Peru and Mexico, and if a community doesn't want you there, there's a roadblock up, and the operation's down, and end of story, right? And so this is something 100%. I think mining companies in my opinion, are probably ahead of the curve on, compared to other people or other spaces rather, because it can be such a big problem. Where do you think, or where has your research shown that the mining industry is maybe falling down, or perhaps there is room to improve significantly?
So what I found really fascinating in the last, we launched our exploration framework, which was the first one out in March of this year, development in June, and then our producing framework will come out in October. What's been really fascinating is that there is complete willingness by this industry to disclose ESG. So, but to answer your question about that, and out of that is these companies are aware that transparency can help relationships. Look what's happened with ESG, with the virus. As soon as COVID started happening, the mining industry really got involved in some of these local communities to help. And that soft positive is not really coming across with this industry. The mining industries have been doing a lot of good. And whether or not it's a junior mining company or a producing company, you can go through the whole realm and you can see the impact that these mining companies have had on the ground with a lot of these communities around there. And I do see, if we can create a standardized structure with which people can disclose, which is transparent, future looking, then ultimately you can engage much better with your local communities, with your other stakeholders, with your contractors, with your staff, with millennials, with whoever it happens to be. And it's a little bit like glassdoor.com, where, you're working for a good company or a bad company and people do it. In a very similar way, if you want to go and get a job in the mining industry, who's being good at ESG, who's embracing ESG and going forward, whether it's the community or not. So I just think, it is, in fairness, it's a little bit more of a modern way of doing it. The industry is a little bit sometimes, backward looking to the extent of, keeping things secret a bit. but it's not that competitive, this industry. And what we really want to do is we want to actually engage with these communities, and give them the ability to have that that engagement, which allows transparency, which hopefully will reduce some of the uncertainty in the industry.
Yeah, I mean, I think you're totally onto something. I think, the world is kind of shaking for an energy revolution, for, reduction of emissions, and that is going to take a lot of mined material to do that. There's going to be a lot of copper, there's going to be a lot of lithium, there's going to be a lot of cobalt, there's going to be a lot of nickel, there's going to be a lot of steel, all sorts of things. And I think most people out there, and even a lot of investors, haven't made the connection between that necessarily yet. And so I think, given there's going to be this sort of ESG green pressure driving development around the world, driving mining, I think there's going to be so much more pressure on the mining industry to deliver a product that is considered clean, or at least as clean and non-destructive as possible. So I want to get into how Digbee is going to help with that. But first, can we take a little bit of a step back and talk about how you got into the mining industry and how you sort of moved into this space? Because it sounds from our very brief earlier conversation that it is not a direct path. So I'd be curious to hear more about that.
Well, I'm honored to be talking to an ex-Camborne School of Mines student who studied ESG. So I'm not an ESG expert, and we've surrounded ourselves with ESG experts to make sure that we come up with the right quality. But what I did have is 35 years of mining finance. And so I started off at SocGen, which was a mining commercial bank. I was involved and owned my own boutique companies. I sold one of them to Bank of Montreal, to BMO, and set up their UK equity product side in London, which effectively was specialist mining. I left. I became an independent director of a number of different companies, largely Canadian biased. I'm on the board of Altius Minerals, was on the board of Gold Standard Ventures, Extoria Gold, for instance. Then set up Digbee in 2016, initially to try and mitigate risk in terms of development of mining projects, and to try and improve that execution, which this industry so dearly wants to do, because I think that will then bring in new forms of capital. But when I launched that in March of last year, I was approached by a gentleman called Evie Hambro at BlackRock, which the industry probably knows, and somebody called Mike Barton, who heads up the London office for Orion Mine Finance.
And so two of the biggest mining-focused private equity firms in the world, to put that into context for people. Yeah.
Yeah, and they didn't approach me together, but it was at the same conference. It was at the BMO conference last year. And they both basically said the same thing. You need to use your platform to give a solution for the mining industry with regards to ESG. And it was on the back of that I then went away and did some research, had some personal experience with regards to a couple of the boards I was on at the time, the challenges that are there, and then the rest came out from there.
So, okay, let's dig into that a little bit, because I actually think that transition is quite telling of what's going on a broader scale. So what did Digbee initially start at? What was the focus of your reports and your research at initially upon launching?
Yeah, so having been an investment banker, sales, and all the rest of it in mining for so long, and in a way, it's a bit sad to say this, but it's just a reality, is that over 80% of projects that go into production get into production beyond budget and beyond time.
I actually would have thought it was worse than that. I actually would have thought it was worse. Yeah, but anyways.
Well, McKinsey has a very good document online, which you can Google, and I think it's something like that. And I think on average, they go over budget by 45%.
And so I bet you really, if you removed the majors, if you removed the Rio Tintos or out of that, it would be a lot worse for the mid-tiers. And anyways.
And so, and I'm passionate about this industry. I want this industry to be regarded as a place where investment can happen, and people get positive, results out of it. And the equity shareholders in this, as long-term shareholders, rather than the traders who can trade around it, but the long-term shareholders rarely come out on top of this if you go through a whole project in its life cycle. So that's not a great, that's not a great advertisement for the industry. No. So that we have a lot of data. 43101 is fantastic. However, we have a lot of consultants out there, engineers, geologists, metallurgists. Why weren't we using them to put objective, plain language and affordable due diligence on metallurgy, geology, and engineering out there to mitigate risk, not just for the investors, but also for the corporates who are using consultants, and therefore they need to balance that engagement with them as well.
So this is a bit of an interesting idea to me, because this is an idea similar to an idea a good friend of mine had about 10 years ago, that, it's very hard for someone outside of a major mining company that's been building mines all over the world and has a huge database of data to understand what actual costs are, right? Like what is an actual cost to build a gold mine in Quebec? How much does it cost to move a ton of rock? How much does development cost? And look at historical data about what you can expect, because most of what is publicly available is the NI 4301s, which is assumptions of what it will cost. Mm-hmm. And in my experience, my opinion, the company is paying for those reports, they're paying for those assumptions, and they tend to err on the side of optimism, which is why 80% of these things come in under over time, over budget. So it's really hard to actually find real data if you don't work or have access to the database of a significant company that's built it up over years, if not decades.
So when we were looking at this, there were two or three things that came out of it. First of all, the underlying data, I must say data or data, depending if I'm in the US or in the UK. So
we're in Canada though, so you can do both. Yeah,
you can go both. The underlying data in these reports is really good. These mining companies or consultants, whoever's been doing the drilling, they work under very strict conditions, and that data is good. It's the influence of then moving it into assumptions, into that NPV and return on capital, which is where it gets skewed. And if you think about it, you take a funnel and you put all of these data pieces, the kind of resources, reserves, the grade, the metallurgy data, the engineering data, and it all goes into the funnel. What comes out is the IRR and the NPV. Mm-hmm. And it doesn't take much to kind of skew the assumptions up in that funnel to effectively change that NPV and IRR. Yeah. But the underlying data is really good data. And we found that data is really, it's done under very strict conditions. You look at any of these 43101s, it's done under very, very strict conditions. And actually, I think we should have great confidence in the underlying data. We just got to make sure that some of the assumptions of taking that data through to, in terms of timelines of building something or what this is going to cost, coming back to some of the things that you've said, is that we just need to associate that data with the other data to create that NPV and IRR. Sometimes needs to be probably better managed, or at least probably better managed is actually the wrong word. I think it needs to be, I think the right way of putting it is we need to mitigate risk earlier on to ensure that the hurdles that we have to go through to build a mine are mitigated in a better way. And people should be more aware of those risks to get through to the end result.
And okay, and how was the reports you guys were putting together at Digbee? How are you guys addressing this? What were you doing differently than an NI 4301 report, for example?
Yeah, so we were taking the NI 431, so we took publicly available data. So it was difficult to do the Aussie stuff because they don't fully publish. But with regards to the great 43101 thing, which is fully available, we take that data, or we take that public document, we get our expert network of geologists, metallurgists, and engineers. Those who are accredited are then approved to write. So they've got to prove accreditation. We then create a set of frameworks, standardized frameworks for geology, metallurgy, and engineering, and also for actually we actually also did the report for Pretium, for instance, after it had gone into production, so basically on the back of a mine plan. And so we have these standardized frameworks, and we get the expert to effectively write that. We then have quite a strong internal review of that, working with the underlying author to make sure that we've challenged them on a few things. And then effectively it's put out into a publication. They get 50% of all of the income, and we market these out. And the feedback has been really fantastic. What I would say is that I don't want to jump onto ESG too quickly on this, but the ESG opportunity is so big and so needed in the industry that we've slightly stepped back in marketing this too strongly in the course of the next 6 months.
Well, and so that's something I want to ask about, because you've decided to make this shift. Who were your initial customers for the initial product?
So the people you would expect. I mean, they were quite public with testimonials, groups such as BlackRock. There was the corporates themselves. Actually, there were a couple of Vancouver companies who I won't mention their names, but there was one particular company which is reasonably well known, and the CEO of that company is a geologist, and they bought a geology and metallurgy report off the back of a PEA, if I recall rightly, and a number of issues came out within that. And that CEO came on to me and basically said, I can't market some of this stuff, but you're absolutely right. We've got no arguments against any of this, and we're going to use it to mitigate into the PFS. And to me, that was absolutely, you think of that on
so
a 5-year
this was on his own
basis.
project. This was on his own project. Okay, really?
And it wasn't a negative report, but it was highlighting certain things. So, for instance, it said, you got me on the spot to say exactly what it was, but it related to a low-grade resource, which had had certain type of assay results done, which would have been more normal to use in a high-grade result, and they were using a lot of historical data as opposed to modern new drilling.
Right.
And therefore, if you added risk upon risk upon risk onto it, there was a result that it was possible that up to 50% of the resource could be unreliable, was the word. Now, that in itself does not mean to say it's a bad project. It just says you've got to be aware of these risks, and therefore, that as you mitigate and do certain things at the company to reduce that risk, you then further strengthen the confidence within that range. And it's not obvious from an average person looking at that company to do that. So I actually think it's a great asset. But it was really interesting to know that kind of element of risk that a fund manager or an investor would like to have known before that.
And very few fund managers would be able to identify something like that. That's an extremely technical sort of view there.
Absolutely right.
Yeah. So, I mean, you had the product, you had an audience for this product, but what's very interesting is, so your customers kind of came to you and they said, well, this is great, but what we'd really like you to do is focus on ESG. So, I mean, I think that's really demonstrative of what's going through the minds of these people, right? These people that are allocating, billions, if not trillions of dollars around the world into this sector and others, what they're really thinking about and what their investors, their LPs are thinking about as well too, right? The big pension plans and university endowments where these guys are getting their money from, right? This is, I mean, presumably this is all trickling down to from the top. So I'm trying to think about the best way to take this. Let's, talk a bit about what you guys are focused on at Digbee ESG and then some of the forces driving that.
Okay, well, maybe it almost goes back to the research. All of this is risk mitigation. I mean, ESG, which maybe was a bit out there in some way or another, 3-4 years ago, and it's all kind of taken this massive spurt and gone on where we are now. In reality, what's happening is that the companies with more positive, not just in the mining space, with more positive scoring on ESG are generally regarded as lower risk or lower idiosyncratic risk within that company, and therefore they are gaining a higher or a reduced cost of capital, a higher rating.
Yeah.
And so that is what's happening. I mean, that is real life now. There was lots of evidence to support that.
This is partly why this conversation is so interesting to me, because, I was saying to you before, my master's was focused on ESG and mining, and at the time it was a very niche. It was niche and known within the industry, and there were a group of diehards, and people loved it, but it didn't. A focus on ESG and environmental and sustainability and all this stuff did not seem to me at the time at all to translate to an increase in share price, an increase of interest from investors, anything like that. And even in the last, I think you said it, 3 or 4 years, that has gone from here to here. It's been a 180-degree shift. I do want to dig into this. Like, does your research show that companies that are addressing these issues upfront, transparently, aggressively, are they valued more, and are they having easier and better access to capital?
So the answer is yes. The research is very clear, not necessarily in the resource spaces at the moment.
Okay.
The resource space is a bit, I would say, and it'd be interesting to ask the same question to somebody like Evie Hamber, actually, but definitely money is being directed as with regards to where ESG or the perception of ESG is within these companies. Wider afield, there is no doubt there is clear evidence now to suggest that there is a lower cost of capital for companies getting a higher ESG score. Within the mining space, you've got to remember that 85% of the sector doesn't have a revenue stream. They have largely been excluded from disclosure of ESG. We must differentiate the difference between disclosure and doing. Social license and everything has been part of this industry's bread and butter for decades. So there has been a lack of appropriate disclosure for many different reasons. Some people not thinking it's needed up until now, some people lack of standardization, et cetera, et cetera. So I would argue there's not a lot of data to prove your point at this moment for the large part of the numbers of the sector. But what I am being told by sell side, at least in London, because we know that Europe's a little bit further ahead on this ESG world, is doors are closing for finance.
Yes.
Every single day with regards to mining companies.
And, anecdotally, this is of my own experience. I was having a conversation a couple months ago with a friend of mine, CEO of a significant producing mining company, and he said, even in the last 2 years, they've gone from never getting a single question about ESG to, if they're meeting with fund managers or capital allocators, what have you, something like 50% of the questions are focused purely on their guidelines, their reporting, their plans, et cetera, et cetera, et cetera. And it's been this real shift in the zeitgeist. And, this is a great company. They're on top of it. They've put a lot of capital into sort of developing that. But, a lot of companies, and like you said, 85% of the companies don't make any money. That is a challenging thing for them to act on quickly and effectively. How are these companies addressing this? What are the tools that are available to them?
Well, I think the companies have to. So I think all of these companies. We all know that junior mining companies or mining companies go, hand out for money every year to the institutions. And I was talking to Sean at Triple Flag earlier this week, and he was highlighting that his LPs, they've just done a fundraising round, or they've just done their IPO, and they were being dominated. The questions were dominated by ESG, and so it's not a matter of somebody just saying you've now got to do this. This is, as you say, trickling down through the system at a rapid speed, going in from society into governments, or driven by governments, through corporate governance and requirements, and then through this whole financial network. And I think I said earlier, over 50% of funds are now committed to net zero. So it's only a matter of time before ESG, which is beyond net zero, it's not just emissions, effectively has addressed the whole thing. So we're not going to escape this. And I think, how do we address this? And I mean, it comes back to Digbee. There is no real way for the typical management to know what to disclose and how to disclose this. So what we needed to do, and what we designed and developed with the help of institutions, with the help of our consultants, and our advisory board. Our advisory board is important to highlight, which is Elaine Dorward-King, who's well known as head of ESG, or ex-head of ESG at Newmont, Rich Borden, who was head of their environmental side at Rio Tinto Copper and Diamonds, and more recently Tom Butler, who just retired as CEO of ICMM. And so they very much kind of sign off on all of these frameworks. And it was important to make sure that we had right-sized frameworks. So, an explorer is not having to deal with what a producer is talking about. And at the same time, that it was future looking. It's not just looking at historical information. We're looking at where does this management want to take the company in the future? And if you think about for the moment, that's really exciting for the junior space, because the junior space is not left with the legacy of whatever Rio Tinto, BHP, and all these Vale and all these other bigger companies have going back decades. They're starting out fresh, and they can move this forward. So you've got new commodities going into electric vehicles, batteries, or whatever it is, off a brand new sheet. And I think that's really exciting for this sector. And there's no reason why this space needs to be at the bottom of the pile, which it is. The Standard & Poor's index of E&S has mining at the bottom with oil and gas. There's no reason for that to happen at all. It's critical to the world's transition to a sustainable future. We just need to get a better promotion of what we're doing and how we're doing it and what we're going to do in the future.
Okay, so if you're a junior mining CEO right now, what are the things you should be focused on in terms of getting out, in terms of running your company, but also communicating effectively to the market, to your stakeholders?
Well, first of all, you should not be afraid of this. This is not a pass or fail, an exam, an audit, or anything else like this. This is, are you embracing ESG, and communicate that to the world. The easiest way to do it, I'm a salesman, is to effectively sign up to Digbee.
And how does that work? How does your product help people do this?
Well, the real nice thing is that we, having got these three frameworks, exploration, development, production, any company can sign on. It's free to sign on. They put it in their team, their submission team, and make sure their assets are in the database. They get the questions, and it's completely free all the way through to the time they submit. In other words, they get the blueprint of creating an ESG strategy completely for free, all the way through to the time they want to submit, and therefore get an assessment done from that. And that, all they need to do is that, and they can then create that strategy, which then is half of what you need to do. Then what you need to do is to communicate it. Well, so obviously it helps then to be independently assessed, get a score back. They can hide for the first 12 months. So there's no risk of being worried about a single score, whether it was good, bad, ugly, or whatever it is. But they've got the certificate to say they have done it. It's been independently assessed, and there is a roadmap as to what they should now try and focus on in terms of trying to improve it.
So they basically go in, they answer all the questions about the things they're doing, what's going on site, et cetera, et cetera. Yeah. You guys give them a score, and then there's a plan saying, well, if you're I'm going to just make up these numbers. If you're a 1 and you want to get to a 10, you got to do this, and then you said it's hidden for 12 months. So does that become public at the end of that next year?
Yeah. So they get this report back. And the report would cover an executive summary, the score of the corporate questions, which for an exploration company is about 28 questions, the score of each individual project, which is about 50 questions per project, and then an amalgamated score to give you a whole score for the company. And then there are positives and negatives for the relevant projects, which you can see, and there's a tornado chart of all the different questions where you've been scored. Any sensitive material in this, it's at the company's choice to decide whether or not it's in the public domain or not. Okay. The scores will be public at the end of the 12 months.
So what are some questions people can expect to get in this sort of thing? What are the things you're trying to understand and address?
So, I mean, they're not siloed in ES and G, although largely the corporate does align to the G side of it. But on the G side of it's typical sort of stuff that most of these public companies will all be aware of. ISS, Glass Lewis cover a lot of this stuff already. On the project stuff, which is really the focus, to get the impact, what's going on the ground. So a lot of the questions are context-based. Where are you? What are you doing? Not just which jurisdiction, but are you next to a hospital, or are you next to a UNESCO heritage site, et cetera, et cetera. And then also it kind of asks you, what are you doing with regards to power now and in the future? So if you've just got an exploration site in the middle of the kind of the Northern Arctic, you've probably got a diesel generator. You might have the option of doing some solar or some wind in the future. Maybe the local community could benefit from having some of that in the future. So what are your plans to do that? What are you doing with your mine waste from drilling, and also from your your human waste, so to speak, up in that, and how can you potentially improve it? It goes further than that with regards to nature, water, and what are you trying to do to? I mean, obviously in Canada, it's quite a it's very well controlled as to what you can and cannot do. But in other parts of the world, arid parts of the world, like Chile and everything, what are you doing with regards to water conservation going forward? So it covers, and this is probably an important part just before you jump in, is if you go onto the MSCI website, you can see the chart of all the different topics that fit into ESG.
And what's MSCI? What's MSCI?
MSCI it's one of the big ratings agencies.
Okay,
I never know what they stand for actually, but if you go on to the PwC did a really, really great, I'll send it to you and you can send it to your viewers. There's a really great 10-page document done the end of last year for boards of directors about ESG. And it includes this MSCI chart. And I think there are 35 topics within the spectrum of ESG. And I counted, I think 30 of them relate to a typical mining company. Now that's quite scary to think that the obligation by a board of directors is to consider ESG in all of its decision-making process. So they've now got to cover that off. So this is a great way, Digbee ESG is a great way for boards of directors to address their obligation, very straightforward.
And how do you guys validate this information? I mean, can I just sign up and say, like, we're doing great, you know, there's windmills everywhere, you know, like, what? How do you actually prove that these companies are doing what they say they're going to do?
Yeah, that's a great question, and it's slightly different as you go through the different stages. So for the earlier stages, first of all, the questions are aligned to the global standards, and they've been asked very personally. So we know what we want to try and get out of these questions. The second thing is it's approved by the board of directors. So before you submit, a person appointed by the board has got to approve that submission. So the weight of responsibility, as per the Paris Accord requiring this, has gone up to the board of directors.
Right.
Then you get two independent ESG experts who go over this. So two sets of eyes go over this, and there's a third one, which is an umpire if needed. So then you've got
and do these guys work for Digbee, or are these third parties?
No, they work for our consultants.
Yeah, okay.
They work for our consultants, which is a group called Satala. And they've got a large affiliation around the world, Spanish speakers and French speakers and English speakers and everybody. So people who are specialists within all forms of ESG, whether it's governance or whatever. And then it comes back to the company, bearing in mind that there's the questions are designed so you've got to support it with narrative to support that answer, the basic answer. And also you can provide evidence to support that answer as well. So you don't need to go and write policies specifically to answer this. What we're saying is keep it simple, answer the questions, and provide evidence where supported. Where there isn't evidence, then obviously clearly the feedback at the end of the report will be clearly you're weak in these areas and therefore go away and kind of structure something over the next year before your next submission. In the later stages of developing a mind, what we're going to incorporate next year is more formatting of evidence. So drone technology, satellite imagery and stuff like that. So for things like the producers, when they've got a tailings dam and stuff like that, you can actually begin, it's not an audit, but you can begin to use modern day auditing techniques to support your evidence going forward.
And how has the uptake of Digbee been amongst companies? I mean, what's the feedback you guys are getting from your clients?
Yeah, while being a salesman, one always comes out with a great positive on this, but I'm always in the belief that one should just be straight out and open and honest. So I can tell you that the traction is blowing me away. I mean, it's way higher than I expected. However, the time it takes to go through the process is taking longer than we had anticipated. Partly, or mainly, I would say, because this is a budgetary item. For a typical exploration company, this is going to cost about 20,000 US. So therefore, it's a budgetary item which needs signing off, and it needs board of director typically approval. But boards now are scared of ESG to some degree, and they want to learn about it. They want to understand it. So there's an educational period. So I'm either having to present more than 2 or 3 times to a company, sometimes to the board or their sustainability thing. So it's taking them a bit longer to go through than we thought. But the actual take up of it, I mean, I was at Minds and Money conference this week. We had 33 meetings or something, and every single one has said we want to go forward and discuss this further with you. I mean, it is literally, cool. It is full on. The only companies who have said no have all said just come back to us in January next year. We're doing drilling or whatever, which is understandable. But I think everybody should get on early. I think it will help them earlier. And the second year is much easier to do because we help them with their first one. Right. So there is that. So
something I want to ask about. So you were in mining finance. You have, dropped some very big names on this conversation and have obviously, not in a bad way, but you've obviously worked with some of the biggest financiers in this sector and have gotten to know these people. And give me an idea of the questions that they're asking. And the reason I'm asking this is because, like I said earlier, a lot of these people who listen to this podcast are investors, but they haven't had the benefit of working with a major private equity firm or hedge fund or one of these things, and they're investing significant amounts of their own capital, but they might not be as familiar asking questions and doing their due diligence from an ESG perspective as they might be from a technical perspective or from a financial perspective. So what I want to help people understand is what kind of questions should they be thinking about? And, what kind of questions are the biggest, best prepared guys in the industry asking right now? And really the expectations now that they're placing on the companies they're investing in, and what are they demanding now?
Yeah, God, we could talk for hours on this. I think this doesn't necessarily directly answer your question, at least in the first place. But I think the one thing is what we've got to understand is the analysis of ESG, particularly in the mining space, is incredibly inefficient. Every single fund manager is asking in their own questionnaire. The questionnaires are, at least the ones I've seen, have not been that thorough, shall we say? Largely because this industry, the ESG industry, is changing so rapidly. And therefore, just think of a typical juniors going out to raise money with private equity and all the rest of it. They're probably going to have to do 10 different questionnaires or more. And so it's inefficient for the junior. It's inefficient for the private equity and the other fund managers in itself. And therefore, it's not really working. We're getting no standardization. Therefore, we get no meaningful comparison. Mm-hmm. And therefore, we're not getting the benefit of ESG, which is so obvious, at least in my eyes, that this industry can become a world-respected industry, particularly with the products is needed for the world, and with which ESG, new pools of capital like ESG and impact investing funds can invest in once they've got a credible means to track it. We don't have that. Now, that doesn't directly answer your question, but I think it's important. These funds or these groups, the financial world, and when I mean stakeholders, I don't just mean funds. I mean insurance companies, I mean local stakeholders. Everybody needs to have free access to this data so that they can easily assess. It's easy to understand. And I think...
So they're still figuring it out, basically, is kind of what you're saying.
Well, there is an element of figuring it out, but what they really want is a standardized form with which they can reliably use to credibly track not just ESG, but actual impact on the ground, which is going to have an impact, because this industry is not going to pull itself out of the muck of being the lowest perceived industry in the world unless it does something for itself to do it. And as I'll drop Evie Hamburger's name again, but he was very public in his way before we started this to say that we want to get a balance sheet of approach here. We don't just want the journalists to talk about the negative mining. We want to also to focus on the many, many positives that this industry has been focusing on over the last 20, 30 years, and which never, ever comes out. And I always remember the Rangold, Mark Bristow thing of what they were doing in Africa, and always in front of their annual report and account, with the local wives of the miners growing oranges or whatever it happens to be on these farms, providing education, providing employment, providing sustainability of an ongoing business going forward in the long term. And none of that ever came out. And so what are they asking? They're asking for standardization and ease of access to analyze. I think your question, though, was more specific as to what are the areas.
That's helpful, but I guess something let me frame this differently. if you're an investor at home and you're investing in mining companies, what are the things you want to see from a junior or a mid-tier mining company before you would consider putting your money in there today? You know,
it's really straightforward. It's really straightforward.
okay.
I want to see that management embracing ESG in its real sense. 30 different topics, and they're addressing it.
So you should have said buying Digbee. Should have led with that.
That was well, then I've got some way to go with my learning as a salesman.
Okay. So yeah, please explain more. What do you want them to see?
I literally, if I'm a millennial and I've not invested in mining because of the word mining, which is frankly that's standard, and I've employed head of my marketing. A wonderful girl from your hometown of Vancouver. And she was completely anti-mining. And she was working for one of the mining companies there, but on social engagement in Africa and stuff like that.
Yeah.
And I was encouraged to look at her because she wanted to be in the ESG world. And she's completely turned from being negative to mining to being positive to mining because she can see how much impact mining can have, whether it's communities and ultimately, trust me, on nature as well, actually. Even though we do disturb it, there are actually many positive nature examples as well. And then ultimately, the impact that this can have in the world with regards to its products. So a company that is embracing ESG, bearing in mind that that covers 30 odd topics, embracing ESG on a real basis, which can be tracked and improved, and therefore having a direct positive impact on the people and communities and hopefully ultimately nature and other things that are involved with that mine on site.
And how would you recommend, I mean, I'm digging into this a little bit more, even for my own curiosity, but how do you recommend understanding that they're serious about ESG, that they're making a real impact as opposed to maybe just paying lip service and having a pretty brochure on their website about
Yeah, look, I have a lot of confidence that Satala have developed these frameworks which were designed to address that specific point, Jamie, and their assessment of the submissions that are coming in with two sets of eyes are designed to effectively make sure that we do catch those who are kind of maybe slightly trying to say something different. And we haven't seen much of that. We're genuinely seeing people who want to disclose ESG, respect it's a journey. It's not a pass or fail. It's not a test. It's a journey where you're going to start today and you're going to continue into the future. And there are a lot of companies out there who genuinely want to produce a mining company with products which are critical to the world's future in a sustainable way. We're always going to be digging holes in the ground. There's no point pretending we're not. It doesn't come out magically. And I'm not naive to think that there aren't challenges along the way. But there's no doubt in my mind that the changes in this industry in the last 20 years, which have not been fully recognized, and the intent by management of many companies today to take ESG, because that's where it is today, and take that positively forward is completely there. So how can I be sure? I've got complete confidence that the structures we put in place will deliver that. And certainly the feedback we're getting from the customers and ultimately the other third parties or the stakeholders is encouraging. We've got some really interesting discussions going on more at the producer level with the insurance industry at the moment, because they feel as though ESG is going to become a critical element to pricing and ultimately capacity of risk within the insurance industry. Now, it won't really impact the juniors, but when you do get into production and you need, all those other kind of bits of insurance, I think these discussions are really exciting.
Okay.
I think it almost brings it all together.
Yeah. Jamie, we're coming up on time now. Is there any questions that I didn't ask that I should have asked you? Did I miss anything?
I don't know if we talked about cost, and obviously it's always a thing that people are scared about because this is an extra cost. Look, for an average For an average exploration company, it's going to cost roughly $20,000 with 2 projects. For an average developing company post PFS, it's going to cost around about $30,000. The prices are available on our site.
All right.
But with that, you get a full report back. You get an hour's Zoom with the assessor to kind of go over and try and guide you as to where you're going to go forward. You get the public scores to allow you to engage with other third parties. I think it's the key thing is this is not algorithm scoring. This is manual scoring to a robust structure with real outputs, and hopefully that will help this industry find new pools of capital to invest in, which I think is there ready and waiting for us.
All right. Well, that seems very reasonable. Now all the Vancouver promoters listening to this just need to skip a few rounds at the bar, and they'll be able to afford that no problem, I would guess. I think we're going to call it on that. Thank you very much for taking the time. Ladies and gents, that is Jamie Strauss from Digbee ESG. Do please check them out. Thank you very much, Jamie.
Jamie, thank you very much indeed. Have a great day.